Yeah, very good afternoon to all our viewers. I'm Seema Girotra, Additional Director and Secretary to the Committee on Public and Government Financial Management. And I welcome all our viewers to this today's webinar on a very important topic, environmental social governance in public sector, which we also call ESG in public sector. So today we are doing this webinar under the aegis of Committee on Public and Government Financial Management. And we have today with us an expert in this area, CA Ashok Rao. He's an eminent speaker from Chennai. And thank you so much, sir, for joining us in today's webinar. We also will like to welcome, we have CA Jitendra Vanchal. He's a co-opted member of our committee and he's also moderating today's session. And we are sure with the two of our experts which we have, today's webinar will be very lively and engaging. So, just a very brief about this committee. The committee is on the Committee on Public and Government Financial Management, wherein we partner with the government. Since the institute is through this committee, we are trying to contribute in improving the accounting and financial management system in all the three tiers of the government. For this, we are also doing capacity building of government, and for in various we are engaged in doing training programs. We are also submitting our technical documents like GASAPs and also exposure drafts issued by IPSAS. We are giving our comments. We are also running a certificate course on this area, and also we are supporting the office of CNAG. We have developed a course on panchayats for municipal and panchayat bodies. So basically broadly, and also conducting research in this area of public and government financial management. So under this aegis of this committee and this topic, we are sure it will be very interesting, and we'll also in the end tell the opportunities, the professional opportunities which are available for members in this area. So now I'll request our Jitendra sir, please take over for this webinar.
Thank you, ma'am. Thank you very much. Good afternoon, our distinguished guests, colleagues, friends. I, on behalf of the Institute of Chartered Accountants of India, I extend a warm welcome to all of you to this webinar on the environment social governance in public sector, organized by the Committee on Public and Government Financial Management, where I am also a co-opted member. I also warmly welcome to our Inefficiency CA Magnesh Pandurangaji, Chairman of the committee, and CA Pankaj Vice Chairman of the CP and GFM committee for taking time out of their busy schedules to join us for this important webinar. He may join little bit later or as per their convenience, because he was both were busy and some other work. So we will wait when they will join. It is my honor to welcome our esteemed speaker, C. Ashok Rao ji, a distinguished expert in the field of environment, social and governance in the public sector. We are grateful to have him with us today. About the theme of the today's webinar, today the world stands at a critical crossroads. Environmental pressures, social disparities, and growing demand for accountable leadership are reshaping the expectations placed on public institutions. Because all people are expecting from the government. This is where environment social governance assumes a pivotal role. The ECG is a more than a policy trend. It is a guiding philosophy that enables governments to make equitable and transparent decisions for the long run. By embracing ESG principles, the public sector can lead by examples, protecting our environmental, promoting social justice, and strengthening the governance system that uphold public trust, which is a main important thing. ECG offers a comprehensive framework that enhances public accountability, encourages resource utilization, safeguards, and social welfare, and reinforces ethical governance and practices. As global challenge is continue to involve, a public institution that adopt ECG are better positioned to deliver effective policies foster public confidence, and support long-term national development. Ultimately, ECG is not merely an operational tool. It is a strategic commitment to responsible, resilient, and sustainable governance. This webinar, I am sure, will play an important role in advancing the skills of those attending today's, and I hope uh, all will enjoy this webinar because we have a very expert speaker on this topic. And in absentia, uh, I will like to read the profile of our committee chairman, CM Magnesh Panduranga Kinreji, because I am really in the last so many meetings where I have attended, I am really impressed with his working style because he's always in the present in the meeting, and he tried to understand each and everything in a detail. So CA Magnesh Panwanga Kinnareji is a distinguished chartered accountant and a significant figure in the accounting and corporate governance fields. He currently serves as an independent director at D-Link India Limited, a well-known listed company, and is a Central Council member of the Institute of Chartered Accountants of India of the ICI. Within the ICI, he holds multiple leadership roles, including chairman of the Professional Development Committee and vice chairman of Ethical Standard Boards, and is an active member of several other committees. Mr. Mangeshji is also a senior partner of Messrs. KP MS and Associates Thane, where he has been associated for the over 30 years. His expertise lies in areas such as GST, service tax, VAT, internal audits, income tax, and corporate consultancy. As a renowned faculty on GST, he has been a speaker at various prestigious forums, sharing his insights and knowledges. His previous roles, including serving as a chairman of the Western Indian Regional Council of the ICI from 2013 to 2014, and as an independent non-executive director at Moil India Limited from 2019 to 2022, which is a public limited company, we all know. He has been actively involved in the recent developments within the organization, including the introduction of a new CA course that came into effective on July 1, 2023. This course, which was developed with the ministry's approval, aims to streamline the process of becoming a chartered accountant, reducing the duration of the articleship to 2 years and allowing students to take their final exams shortly after completing their training. Mr. Mangeshji completed both his undergraduate and graduate degrees from the University of Mumbai. His extensive experience and contribution have made him a respected authority in his field, particularly in the taxation and corporate governance. Members, now regarding our distinguished speaker of the today's webinar, Mr. Ashok Raoji, who is a chartered accountant and with more than 2 decades of experience. He is the executive director at the Management and Governance Consultant. He is specialized in public policies and public financial management, institutional strengthening and process transformation, and sustainability and climate advisory. He holds qualification in public financial management, including the post-qualification PFM certification for ICI and PFM certification from the International Monetary Fund. He has executed advisory and consulting assignments from national, state, and local governments, development agencies, and non-government agencies. His experience spans across India and other SAARC countries, Middle East, and Africa also. He has been knowledge on governance challenges in a developing country context. He regularly publishes articles and blogs on governments, PFM, ESG matters, and so many other things. He can be reached at the Ashoka at the magic.in, and I was also discussing with him before this seminar. He is from the in this field since from their qualification as a CA, most of more than 20 years of experience. Now welcome CA Shok Raoji to please start the presentation.
Thanks a lot, CA Jatinder ji and Seema ji. It's a pleasure to be part of this, to be speaking at this webinar. Just let me know if my voice is coming through properly.
Sir, your voice is proper.
Thank you. Let me also share my screen. Okay, so at the outset, compliments to this committee on governance and public finance management of the ICAI to be taking up this topic. Normally, it is restricted to governance and public finance topics, but ESG in the public sector is a niche topic, and some of our non-member participants today might know that. Might like to know that the CA Institute is doing a lot of work in ESG. There is an exclusive committee doing sustainability reporting. But realizing the importance of this topic for the public sector as such, the Institute is again trying to build thought leadership in this area, and we should really compliment the Institute for that, for taking up this topic. So having said this, let's dive in. So what we will try to cover today in the time we have, and please stop me in between if the chairman or vice chairman want to join in between and they want to address the participants. So what we'll try to do today is understand what makes the public sector very unique. Why are we exclusively speaking about ESG in the public sector? What's special about it? Including what are the challenges that the public sector faces. Then we'll move on to the topic of ESG per se and its core elements as they apply or as they hold significance for the public sector. Then we'll also look at some of the levers that the government has. Of course, public sector and government I'll be using interchangeably, but some of the levers and tools in the hands of the government to drive ESG action in the country. Then we'll look at ESG reporting per se, as to what is happening in ESG reporting in the public sector, and are there adopters and how they are going about it, as well as some early signs of action that we are seeing, both in terms of ESG policy and ESG reporting happening. And of course, for the members in the group participants, some will also close with some professional opportunities that this area is opening up for finance professionals. I understand that this is a public webinar by ICAI, so we might have different people from different backgrounds, different starting points on this topic who are attending. So at any point of time, if some of the audience, you feel like some of the basic concepts are getting revisited, that is with a purpose, so that it is also beneficial for people who don't have much idea about this topic. And you can always use that time gap to go and catch a coffee and come back where more advanced things can be discussed. So please keep posting your questions in the chat box or the discussion box provided. Not just questions, it will also be interesting if you could share some of your experiences of implementing or whatever, advising the public sector on ESG aspects, and what are the constraints you faced, and most significantly what works and what doesn't work. And I'll request CA Jatinder ji to have an eye on the questions, so that towards the end we can take it up, you can bunch the questions and we can take some common themes across the questions. We can do it midway also if you feel that is useful to break the monotony of the one-way dialogue. So I leave it to you, and then we can move forward on that. So first things first, let us first try to understand the two terms that we are using in today's topic, which is ESG and the public sector. Many of us have a different understanding of these topics, and I thought it's a good opportunity to have a common understanding before we move forward. So when we say public sector, more specifically among chartered accountants who constitute a majority of today's group, we generally tend to associate it with public sector units, which are basically government businesses. This could be owned by the central government or the state government, or it could even be local bodies, floating companies, commercial entities basically, which we tend to associate with public sector. But in governance parlance, public sector has a slightly different meaning. On one side, we have the core government. So when we say core government, we all know India has a three-tier structure of governance. There is the national government, then there are state government, and at the local level, we have both urban local governments called municipalities, as well as rural local governments, whom we also called as the Panchayat Raj institutions. So this is the core government, what we understand as government. But then we need to understand that there is a whole bunch of institutions and bodies operating outside of the core government, which also actually constitute the public sector. So we have this huge social security and other funds. We have boards, authorities, corporations, we have government societies, corporations and all of these. Then we have an entire bunch of government businesses, all the typically public sector corporations or limited companies that we speak about, banks and financial institutions. And some of these are very big companies. In terms of market capitalization, if you look at the top 100 companies, a significant portion of them will be public sector entities. And many of these entities, many of the public sector entities would not even be listed. So even to talk of market capitalization, but they have huge budgets, development boards, whose job, although they are outside the government, they don't constitute of members of parliament or members of legislative assemblies or corporators, but they are primarily engaged in delivering the agenda of the government, or primarily engaged in delivering services and doing development work on behalf of the government, delivering the government's mandate, I should say. So this is actually the public sector as a whole. So for the purpose of today's discussion, I'll not be focusing so much on the government businesses, because we know that government businesses or the public sector limited companies are very much covered under the Companies Act, and whatever applies to private companies more or less applies to government companies as well, which is often discussed. ESG in a corporate context is anyway discussed, and many of you will be aware of it. So when we speak of public sector today, we'll talk of mostly of the core government and what are the implications there and how ESG pans out in this space. So this was as far as the public sector was concerned. So next is what makes the public sector important, or what makes it so unique that we have to discuss it separately. It is, I would say, the sheer size and the kind of mandate that is delivered by the government. It is the largest employer in the country. It is the largest procurer of goods and services. It is the largest landowner, and it is also the largest service provider. And maybe if you include the government companies, maybe the largest manufacturer as well. I'm just taking a guess. The combined budget of the core government itself is around 80 lakh crores, and about 1/3 of economic activity in the country is undertaken by the public sector or the government in terms of the procurement that they do. A staff strength of close to 18 million or more than 18 million. Now, some of these numbers, there are wide estimates floating around. So these are from certain sources that I've taken. So the number is not important, but the fact that it gives an indication of the size of government operations is very important. Even if you look at the kind of stakeholders that the government has to manage, unlike a corporate entity, which has a limited group of stakeholders, government has to look at domestic stakeholders, that is people within the country as well as people outside the country, as well as to a certain extent citizens of other countries as well, to the extent that they depend on government for the services. Individuals as well as institutions, Normally, generally we use the term citizens, but citizens is only individuals. There are a whole set of institutions, the entire private sector and other institutions which depend on the government for infrastructure and services. So these are stakeholders. It is not only the present stakeholders, but the government has to have the vision to create a country worth living in, even for the future stakeholders. Even the kids that are not yet born, the population that is not yet come into the country, will have to take those also into consideration while undertaking development. And it's not only the human form of life that the government has to take care, all other forms of life, including the flora and fauna, that the government has to take care in its as part of its developing its development agenda. And needless to say, all of these activities produces a huge environmental and social footprint, perhaps the largest environmental social footprint in the country when you compare to all the other institutions, which is what makes it very important to discuss not just ESG. Tomorrow we might talk of financial management, or we might talk of procurement, or we might talk of transparency and accountability. In all these matters, when we discuss, the public sector has some unique features as well as constraints under which it operates, and that is what makes it important to take up this topic separately. So moving on to the other topic in the headline of today's webinar is ESG. And ESG, all of us know, stands for environment, social, and governance. So it is basically, in very simple words, a framework to understand how decisions, policies, and actions affect people, society, and planet. When I say decisions, policies, and actions, it is not only of the public sector I'm talking of. It could be the public sector, it could be at a company level, it could be at a household level, at a society level, or even at an individual level. Each of us, the day-to-day living choices that we make also has an impact on all the ESG matters that we speak about, and which is why it is so important. So it is composed of three pillars. First is, of course, the environment, which is more about climate change, the fight against climate change, the climate action, as well as what I would say is a reasonable use of resources that the planet is providing us, whatever the planet is providing, to take care of it and make sure that we leave enough for the future generations is completely under the environment pillar. The social pillar is all about in our pursuit of development and growth to ensure that no one leaves behind. Our growth aspirations cover as much of humanity as possible. So the entire set of considerations, actions, and decisions around that would fall under the social pillar. And under the governance pillar is about building reputable institutions adhering to good conducts of governance, whether it's a government institution, private institution, or a non-profit institution. So the entire mechanism used by these institutions to operate within the society, of course, comes under the governance pillar. So the bottom line is the ESG is about responsible operations or responsible activities, balancing growth with sustainability, equity, and transparency. And it doesn't matter which sector it is across. ESG is a concept which cuts across sectors, across societies, across geographies, and across race, creed, and color. So now moving on to the specific topic of ESG in government. What is it? How is it different? I mean, some questions might come up that ESG is the same everywhere. I mean, we have a set of things to take care of. We have a set of problems to address, and whatever we do towards that direction is all comes under ESG. But we will realize as we go through the slides in this presentation that even though the context is the same, the challenges are the same, the discourse takes a slightly different pitch when we talk of ESG in government. Why is it so? because of the fact that the government mandate is slightly different, the fact that it operates under a different set of challenges, and more importantly, the tools available to government are very different compared to corporates or individuals for initiating ESG action. So let us now, when I say it is different, the discourse is different in government. Let us take a look at how does the discourse play out when taking the case of a business or a government on two sides. Let's take the first pillar, which is the environment. So when we talk of environment in the context of a business, we are more concerned about the environmental footprint of the business, whether it's the carbon footprint, the water footprint, the waste footprint, or the pollution it creates. It's all about how to reduce the emissions, GHG, greenhouse gas emissions from activities, how to use resources to a minimum and produce the maximum value out of it, how to reduce waste, reuse products, and probably recycle many of the products, how to create minimal air pollution, water pollution, noise pollution, or land pollution. So these are the considerations that we look at. And then the entire enterprise risk management, the environmental risk management vis-a-vis the enterprise risk management. What is the impact of all these actions on the business per se? Here the concept of double materiality comes. In simple terms, it is what is the impact of a business on the environment and climate, and the second is what is the impact of environmental and climate factors on the financial results of the entity per se, financial results or the financial position of the entity or the business prospects. So this entire practice of environmental risk management is something which we speak of, and naturally compliance with existing laws, which change from time to time, the laws and regulations and reporting formalities. All of this dominates the discourse when we talk of environment in the case of a business. Same concept, but when you speak in terms of public sector or the government, the discourse changes a bit. It takes a slightly larger shape, I would say, where we talk of reaching net zero and how to ensure that there is a just transition. When we say just, we mean a fair transition, so that in the process of climate action, we don't leave or we don't certain vulnerable communities are not affected badly. So the entire practice around that. Then how does these commitments of net zero, just transition, these are nice things to hear, but then how do they translate into concrete action plans? For example, in the case of climate change, we have climate change action plans, adaptation plans. Given the fact that much of a significant portion of the damage to climate is already done, and we have to live with the after effects, day in and day out, we are seeing the after effects. So what are the adaptation plans for adapting to it? What is our disaster preparedness, both in terms of resilience pre-disaster as well as response when the disaster happens? And then how to use environment policy and regulation to drive market behavior in an environmentally conducive manner. And of course, how are we going to fund this whole effort? Whether the investment is going to be from the private sector or the public sector or directly from the government, where is the money going to come from? So the entire set of considerations around it is the discourse that as far as the environment is concerned, dominates in the public sector. So moving on to social, you'll see a similar trend there. So when you talk of an individual entity or business, it's about stakeholder value, how to create more stakeholder value, primarily how the workforce management, both the need assessment, giving job security and a decent place to work for people, health and safety, very important in case of manufacturing and industrial context. Then the customer and supplier management, which probably form the bulk of the stakeholders for a business. Then of course compliance with laws, to be on the right side of law as we go about doing the business. And then corporate social responsibility, which slightly looks beyond the boundaries of the business. All along, all the earlier 5 are about what the business can do by virtue of its operation. CSR, corporate social responsibility, is about what more can the business do for the society. So these are the considerations which dominate the discourse there. Whereas when you come to the public sector side, government side, it's about social sustainability, to create a place worth living for the citizens. It's about social justice, diversity, how to make sure that growth is inclusive and it takes care of all sections of society. How do we ensure that resources are equitably distributed, not equally, but equitably? I'll come to that in a bit. And how to make sure that different stakeholders, different citizen groups, institutions have their say in the entire democracy, dance of democracy, if you might call it, in the democratic process. And of course, the entire set of considerations around gender, how to ensure that women participation is ensured and they play an active role in in the nation building, if you may call it. So that set of considerations dominates the discourse on the social side. Corporate side, there is, of course, when we talk of businesses, it's corporate governance, which most of the audience is familiar with. It's about the board and senior management representation, how the decisions are taken, the board decisions, the documentation of it, compliance with laws, primarily the Companies Act, then the corporate governance requirements, listing requirements, and a whole set of other compliances. Business ethics, how to ensure that we don't cross the line in the pursuit of business results, and of course anti-bribery in all transactions, all dealings with the government, and the entire practice around enterprise risk management, of which environmental risk is only one aspect of it. But then there are so many aspects to enterprise risk management, whether it is your business risk, market risk, or your social risk, workforce risks, your information systems risks. So there are so many risks which need to be managed so that the organization doesn't become a liability on its stakeholders and the public in general. And of course, internal controls and audit, the entire set of processes around strengthening internal controls and propriety. So this is what dominates the discourse as far as governance is concerned. When you come to the government side of it, it is about public governance, rule of law, to make sure that nobody is above the law, evidence-based public policy, so that it doesn't become a laissez-faire for everyone. There is a method to how public policies are developed and implemented. Citizen participation, ensuring that it is a participatory process and democracy is not compromised in the process. Anti-corruption, accountability and transparency, all that the government does should be available for the public to see. So how do we make sure that it is there? And most very important is the fiscal prudence, to make sure that in the process of doing all this, in the process of achieving socio-economic growth, we don't create a bankrupt nation, and there is enough fiscal sustainability to carry on this over a long term, medium to long term, is what I would say. So this slide was more about how the ESG discourse plays about in the case of a business as well as in the case of government. As you will see, I think you would have by now realized that the context is same, but the discourses are different. It's even possible to extend this discussion further and see how the discourse changes when it comes to individual level as well. Each of the E, S, and G has implications for individuals, the way we interact with society, the way we go about doing our day-to-day work. And there the terms used will be a bit different. So for want of time, I'll not get into that. So moving on to see, I mean, I've always been saying that the government is different. That is why we need to see ESG in the perspective of government, and their environment is very different. So when I say that, what do I mean? So what are the tools available for government to drive ESG action? There are a whole set of tools, but I thought for the purpose of today's discussion, we can look at 3 main roles that the government plays. One is, of course, as a formulator of policies, rules, regulations, which govern how things happen in the country across sectors. It could be the government functioning or the private sector functioning. But basically, how things should happen, those are driven by government policy. Second is, as an executor of the government budget, as a spender, there is a whole plethora of programs and schemes that the government implements, which can again be very instrumental in driving ESG action. And lastly is the regulation of market or the public behavior. We all understand that a policy by itself or advocacy by itself will not get the job done unless there is an incentive or disincentive system around ESG action. People are just going to go about their day-to-day work as they had done earlier. But sometimes incentives have to be given, and sometimes things have to be regulated, and punitive action needs to be taken. That again falls on the role of the government. So at any point of time, you will be seeing government deploying these three tools, a combination of these three tools in different proportions to ensure that ESG behavior is directed towards the common good, I would say. And this is what makes the government different. If you look at this, none of these are functions that a corporate would play. A corporate entity or business entity would look at its own footprint and try to implement things internally, but it cannot form policies. It can form internal policies, but not public policies. It can't implement programs and schemes. It can have improvement initiatives internally. And definitely, there is no regulatory role that a business entity plays. And that is where a niche gets created for the government to get in and take action. So now, some of you might be getting doubts saying when we spoke of E, S, and G, at least definitely in the case of social and governance, is that not what the government is supposed to be doing? I mean, do we need to bucket it under S and G and call it out separately? A government ultimately exists to govern the country. It ultimately exists for the society's benefit and to make sure that there is we create a country worth living in. So is this not the government's job per se? I would say yes, it is. If you have got that doubt, it is the right kind of line of thinking. But then things have changed over time. So there are certain things which the government is very familiar and has been doing all along. You talk of economic development, yes, that is what the governments have been doing. Social welfare security, that's what governments have been doing. Governing the country and building institutions to deliver the governance agenda, that is what they have been doing, SNG. Yes, there could be different flavors and different ways of doing it now, but that's what the government is expected to do. But of late, what has become very urgent is the E-pillar. Thanks to the increasing damage that we are doing on the climate in terms of fossil fuel burning or the consumption behavior or just our lifestyle habits. Climate change is a real threat, and the disasters we are already seeing. I'm sure each of us would have a story from our own wherever place we stay as to how the climate change is affecting us year on year. It could be heat waves, it could be cloud bursts, heavy spells of rain, extreme weather events, it could be flooding, earthquakes, crop losses. These are all incidents that we are seeing daily, and that has become the new urgency. Yes, something has to be done, people realize, but there is resource stress. I mean, the sheer magnitude of action required and the funding required to get this done is less, and time is also running short, which we read about it every day in the newspapers. Report after report is coming saying every year that we are losing, we are running short of the time available to control climate change and its after effects. A lot of work has happened, and most countries have given national and global climate commitments. But then you have to act on the commitments. It's not just commitment is just on paper. There is a whole action required, and all of this is urgent action. I would say, with high funding needs, and which the government has to finance, as well as carry on its social and governance agenda. It's not that you just take care of the environment and the rest things will get taken care by themselves. All along, as you're doing your core government work, it's also necessary to take up this the environmental challenge that is before us, everyone, I would say. Probably it can be said that this is the largest crisis that humanity faces today, and governments are right at the center of it. So this is how E, S, and G become so important, and the reason that we are talking about it. So now moving to the next section where we start talking about specifically what this entails. We should definitely talk about the concept of the Sustainable Development Agenda 2030. So this was in 2015 when 193 countries got together, organized by the United Nations, and they committed to a set of goals, 17 goals to be very precise, which with the objective of saying leave no one behind. So no citizen of any country is left behind in the pursuit of these goals, and to achieve goals by 2030. Each of these goals has specific targets and then indicators. So there are 17 goals, 169 targets, and about 250 indicators which monitor progress against all of this. So if you see from 1 to 17, if you just run through the headlines, it's a very colorful picture. But you will also see that almost all the environment, social, and governance themes get covered. Of course, governance is hidden in each of this, but definitely the environment and social themes get covered in this. And this has kind of become a common agenda for countries across the world to move towards. So just give you 15 seconds to go through the themes while I have a sip of water. So the next question is, what is happening? I mean, these goals are fine. It's a nice colorful picture, good icons, and it makes a lot of sense. But is actually something happening in this area? And who is anchoring it? In India, this agenda is anchored by the Niti Aayog and the Ministry of Statistics and Program Implementation, and by the Finance and Planning departments at the state level. So when I say they are anchoring it, the measurement and the systems and processes around it, these institutions are anchoring. But otherwise, this is all departments of the government are involved in delivering this agenda, depending on whatever is the specific departmental functions that they are handling. So what are the frameworks through which this is done? Performance management framework. There is a national indicator framework which looks at all the 17 agendas, 17 goals, rather 16 goals, and all the targets and the indicators, and measures progress at the national level. There is a state indicator framework where each state has made its own indicator framework, and progress is being monitored against it. There is also a district indicator framework which many states have implemented to monitor progress at the district level as well. There is good documentation around it, and there is a portal where these indicators can be seen and the progress can be assessed. And for the finance professionals, are there fiscal tools which enable this to happen? Yes, governments are implementing fiscal tools. One important among them is something called as thematic budgeting, where the government, apart from presenting its annual budget, which talks of departmental and program and scheme-wise receipts and expenditure on the cash basis, specific thematic budgets are prepared around sustainable development goals. Some governments are preparing around climate. When I say some governments, I mean state governments. Some state governments are preparing, almost all state governments are preparing it on gender basis. Child budgeting, some states have undertaken. Divyang, differently abled budgeting, states are trying. Nutrition-based budgeting, states are doing. So each state has picked up a theme on which it has to present budgets. And then taxonomies are being developed. to guide this entire process, to say 1 rupee of government budget is contributing to which goal and to what extent. How does somebody decide? My decision might be different from my colleague's decision or anybody else. So there are taxonomies or frameworks which guide on how these have to be allocated to specific sustainable development goals as well as targets and indicators, and those are also being developed. And specifically on climate action, there is a lot of deeper action has happened given the enormity of the problem that we are facing at the international level. There is a United Nations framework for climate change. We might all have heard about the Paris Agreement, where countries got together and committed to certain climate action goals, which were called nationally determined contributions. And every year there is a conference of parties, COP, meeting that happens to take stock of climate action. You might be hearing COP, this year it was COP 30. So last year it was COP 29, COP 28. So these international gatherings happen to take stock of climate action and decide whether we are moving in the right direction or not. Not a very happy story there. We are moving in the direction, yes, but are we moving at fast enough? The clear answer is no, as you would have also seen from the newspaper reporting on COPs. And a lot more needs to be done, a lot more money needs to be put behind the climate action, particularly in developing countries, to make it happen. So this was just to give you an idea of how it all falls into place. What is the instrument which brings all this ESG action together? So moving on to some specific considerations under E, S, and G. So when we talk of environment, what do we speak of? What does it translate into? So it is definitely about carbon emission, which arise because of burning fossil fuels. It is also called greenhouse gas emissions. And the whole idea is to bring it down to manageable levels so that the temperature rise that we are witnessing is kept within a particular threshold, which is 1.5 degrees or 2 degrees above pre-industrialization level. I'm not getting into the technicalities of it because that's not the purpose of this today's webinar. Secondly is energy use and efficiency. How are we generating the energy, from what source, as well as how are we using it efficiently. Air and water quality, I would say both availability as well as quality are very important. Climate resilience, how are we building resilience within our community to be able to withstand the effects of climate action. Then the entire practice around disaster management, knowing that disasters are going to happen, they are going to increase in terms of frequency as well as intensity going forward, since much of the damage is already done. So how are we going to manage it? What are the relief and response measures that need to be in place? And then biodiversity, it's now moving to an environmental aspects beyond climate change, how to ensure there is biodiversity. And lastly, it comes to individuals and lifestyles on resource use and waste generation. So the term that we normally hear is about responsible consumption. How do we bring down consumerism? We move our buying choices to more environment-friendly choices, and then generate minimum waste. Of course, segregation of waste, disposal comes later. The first point is to reduce the amount of waste that we generate itself. So the entire area of practice around it, and to form policies, regulations, programs, schemes, as well as rules of compliance, which businesses and individuals need to comply with. This entire area of practice is something which comes under the environment bucket. So when we talk of social, three main concepts I would like to discuss. I mean, there is a lot more nuancing to social, but we can think of it as diversity, equity, and inclusion. The DEI the acronym that we normally use for this. So diversity is about ensuring that there is adequate representation of all citizen groups across regions, gender, caste, income groups, and every group has a say in the way this country progresses. Example is representation in governance, whether it is in terms of reservations for women in the Lok Sabha, Rajya Sabha, and the state assemblies or municipal bodies, whether the kind of reservation that is there, we see it in the Rajya Sabha for people from different artistic background or differently abled artists, sports people, basically making sure that everybody is represented in the ultimate decision-making body of the country. And this trickles down to not just to the elected bodies, to the other committees, boards that are constituted to run the government's agenda, basically to make sure that there is enough representation. Job reservations is a very good example of how to ensure diversity in the workplace, so that we have people from all castes and regions represented. Moving to equity, this is about ensuring fair opportunity for all, regardless of their starting position and historical disadvantages. I mean, we all know that we all come from different starting points, whether it is in terms of financial standing, social standing, knowledge levels, or the exposure that we get. A person in Bangalore might be getting a very different kind of exposure to a person in a remote village in the country. But then both are citizens of India and both have an equal right to participate in the nation's progress. So, and it's the government's job to make sure that that happens. And that the whole practice around that is equity. We see examples of this in tax policy, more specifically direct taxes, where it's commensurate to the income the taxation is structured. Subsidies are a very effective instrument, although they are also most prone to mismanagement. When we talk of subsidies, that if everybody gets the same subsidies, then there is no equity in it, it's only equality, which is what we should try to avoid. Skill training is another example, so that we know people with not enough educational background or skill training can catch up with the rest of the society. Health insurance is a very good example. And a very small but important example is when the government brings out a portal to make it multilingual. And why should somebody have knowledge of English to access a service in India, within India? He need not have, for that matter, English or Hindi or whatever. He should be basically able to transact in his native language, which is also about ensuring that there is equitable access for everyone. And lastly, inclusion. Sometimes it gets confused with equity and inclusion, but it's a different aspect of the same thing. It's ensuring that all sections of society, particularly the disadvantaged groups, have equal access to resources of the government and public resources as well as services. Examples: concessional credit for entrepreneurs who have different starting points, entrepreneurship programs and training, helping people set up business units in rural and mofussil areas in the smaller cities, helping businesses establish in smaller cities. This is a very good area of example of inclusion. And then making public spaces accessible. Just making an office wheelchair friendly is a great way of making sure that there is inclusion and all sections of society are included in the progress. So this is what basically drives the government thinking as well as action when it comes to the social aspect. So moving on to the governance aspects. So when we talk of governance within public governance, it begins with the ensuring justice or the rule of law, to make sure that nobody is above the law and our courts stay independent and are able to deliver justice regardless of the social or economic standing of the disputing parties, I would say. So everybody should get equal access to the law, and that's one of the main governance agendas. Next is evidence-based policy making. So how do we ensure that government policies don't reflect the whims and fancies of one particular individual or one particular entity or one particular elected representative? He might have his priorities, but then he or she must, the policies must come based on hardcore evidence of the need for a particular intervention, or how policies have performed, what went right, what did not go right, and what tweaks need to be made. I can just share a news item I saw in today's newspaper, where the Prime Minister's office has written to all the ministries saying the quality of the notes which come to the cabinet have to improve. These are notes talking of new policies or new programs, requiring that they need to be a lot more evidence-based and also discuss how this is going to further the government's agenda of sustainable development. So I thought, somewhere that's a good sign of moving towards evidence-based policy making. And then, of course, the criteria of economy, efficiency, and effectiveness. More specifically, when we are talking of public expenditure, huge sums of money. We just saw that the government is the largest procurer of goods, works, and services. So it is important to ensure that it is obtained at the best possible cost. It produces the outputs in the most efficient way within time with quality parameters that are laid down. And most importantly, it satisfies the need for which it was undertaken in the first place, and produces minimal spillover effects, or I would say counter effects on other priorities. Then fiscal prudence, making sure that we don't break the bank in the process of achieving all these goals, and we maintain the nation or the state maintains a decent fiscal position to be able to carry on this activity in future years as well. Then citizen engagement, making sure that the voice of the citizen is heard in all these the policy making and programmatic actions that government takes. There are different ways to do it. The most obvious and the biggest way is, of course, the universal franchise that we have, where everybody gets to vote and elect the person he or she wants to bring to the legislature. But it could also be in many other ways, that engaging, having citizen discussions during budgeting, during formally having stakeholder discussions when you're bringing new programs and policies. And citizen engagement can be done in multiple ways, but it's important to make it a conscious point of action while taking up development projects. And lastly, and most important, is the transparency and accountability, to make sure that every government action is visible to the public, to the elected representatives, and the government is answerable to the elected representatives as well as to the public for all the actions it takes, the money it raises, the money it spends, and the outputs that are produced for it. So these were like under environment, under social, and governance, a kind of a bird's eye view of what it all entails. Now let us actually look at some of these things actually happening in government. I just pulled out a few examples so that we can relate to it. Otherwise, it becomes just a theoretical discussion. We saw in an earlier slide that government plays three roles: as a policymaker, as an implementer of schemes and programs, and finally as a regulator. So now in each of these roles, government can do so much as far as ESG is concerned. How it plays out in actual practice is something let's try to see. Let's start with government's role as a policymaker under environment, social, and governance. I just pulled out some examples. Of course, I'm not going to discuss every single example, but recently government came up with something called as a draft climate finance taxonomy. So what is this? It is a document which guides on how a climate project is to be identified. What are all the things it has to satisfy, all the boxes that it has to tick to qualify as a climate project or a green project, so that then it becomes eligible for green funding. Otherwise, each and every kind of project gets clubbed as a climate project, and then there is a risk of what we call as greenwashing, and money getting into the wrong priorities. So to preclude that from happening, the government came up with a climate finance taxonomy. Then Reserve Bank of India has a framework for acceptance of green deposits, which says how such deposits should be accepted, and more importantly, towards what such deposit, the money collected from such deposits has to be deployed, so that it actually gets deployed for green projects and not some other kind of project. Another major policy announcement, which is developments are happening even as we speak, is the carbon credit trading scheme. Many of you might have actually had chance to work on this, the carbon markets. So which is trying, the scheme is trying to create or invigorate domestic carbon markets, where carbon credits are earned for emissions reduced or avoided, and these credits can then be sold in the market for people looking for such credits. It's a compliance instrument which has been given a commercial character, so that there is a very clear incentive disincentive structure for it to happen. It's basically a marketplace that the government is developing. Coming to the social aspects, we know there was a Right to Education Act. Then very recently we have the Digital Personal and Data Privacy Act, which came up. That of course came up in 2023. We had the rules also coming out, which aims to protect or not protect, to give the right of personal data, the ownership of personal data back to the owner of that data, and the cast obligations on entities collecting and processing the data on how they have to do it. Then there is the Make in India program, which is trying to encourage local production and reduce import reliance. So this, in a single program, government is trying to address the economic as well as the social aspects of it. So it's more like a socio-economic policy that the government has brought out. It could even be the production-linked incentives that we are speaking about. Like this, there are so many other instruments. Coming to governance, as a policymaker, the government has put in frameworks to measure outputs of government schemes and projects. So it's not just how many people, for example, let's take the case of scholarships. It's not just about how many people were given scholarships. What is the outcome you expect out of it? Are learning levels going to improve? Is absenteeism going to come down? And then is the connect with the job market going to improve for people after they pass out? So these are the outcomes that need to come up with. Similarly, for an infrastructure project, the flyover is, suppose let's take the case of a flyover project. The money you spend is the input. You produce a flyover, yes, that is the output which is visible to everyone. But has it reduced in traffic time coming down? Has it reduced in fuel consumption because of that flyover? Those are the outcomes that need to be targeted. And outcomes are again linked to the sustainable development goals and targets. So there is an entire framework that the government has brought about. The central government has already implemented it, and many states are now implementing outcome budgeting based on this framework. Similarly, I spoke earlier of thematic budgeting, where budgets are prepared on SDG, climate, gender topics exclusively, and these can then answer the question of how much money is actually going into each theme. For the money going in, are we generating the outcomes that we wanted to generate? When Meghalaya does gender budgeting, Kerala also does gender budgeting. Is it comparable for the money that Kerala is putting in, for the money that Meghalaya is putting in? How do these two compare? Are they able to get the results? These kind of benchmarking and comparison can be done, and that gives scope for improvement when they start doing such comparison. So entire set of things that as a policymaker government can do. Then of course there is the SEBI has come up with the ESG debt securities framework. I put it as a common box because it is cuts across E, S and G aspects. So any projects which address ESG aspects are eligible. The criteria is given in this framework, and then they can raise money using this framework. Earlier it was just a green securities framework, then which SEBI then converted into a ESG debt securities framework covering the entire E, S and G aspects. So next is, as an implementer of programs and schemes, which is the second biggest tool in government hands. I can keep calling out so many names of programs, but we're all aware of the different programs that governments bring out, central government, state, as well as local governments. For example, the Pradhan Mantri Surya Ghar Muft Bijli Yojana, which is about solar rooftops. Then there's a green credit program, which is aiming to encourage afforestation. Green hydrogen mission to promote transition to more greener fuel alternative. And then green building certification to reduce the emission from buildings by adopting green technologies. So these are some schemes related to environment. Social, the Shakti Yojana is there. So very popular scheme from the state. I come from Karnataka, where free buses, women enjoy free bus rides. It's free across the state in all government buses, and it has proven to be quite effective in terms of outcomes. Then we know of the free cash transfer schemes, old age pensions to give security to people in their old age. And more importantly, an aspirational districts program. It's a nationwide program where backward districts are chosen, select indicators are monitored, and money is given, and investment is made to improve those indicators. On the governance side, the government has implemented several things. One is the Mission Karma Yogi to improve the quality of the Indian bureaucracy by building the capacities within the civil services. And the India's e-governance success story is now world famous. The entire India stack of digital infrastructure that is covering all the things like UPI or Aadhaar or our ration scheme or the vaccination scheme, it's all built on the India Stack platform, which now Government of India is offering to countries outside. So that's a very well done job, I would say. Then, of course, there is a MyGov platform where that is the interface for government to listen to citizens, where we can give our suggestions. And of course, in terms of improving internal efficiencies, the government e-marketplace, which is kind of the Amazon of government, where government institutions can go and directly buy products and services without having to go through detailed and long tender processes. That has definitely improved efficiency in public procurement significantly. So these are the things that government has implemented. Next, as a regulator, of course, I know as a regulator and policymaker, the distinction is not very strict, but there are a lot of things the government is bringing in. Many of us are familiar with SEBI's business responsibility and sustainable reporting requirement, which is as of now mandatory for the top 1,000 companies, listed companies, but it is going to get extended further. But then recently the greenhouse gas emission intensity rules came, which casts specific emission obligations on entities, and whichever business entity falls short, they have to buy credits to compensate for that. So on one side, it is putting the compliance obligation, on the other side, making sure that companies which are taking affirmative environmental action have excess credits which can be sold to these companies. So creating an entire marketplace around it. Then the disclosure framework by RBI on climate-related financial risks, not only for financial institutions per se, but also covering the portfolio of their lending. And then environment and social assessment requirements for public projects. So these are all on the environment space. On the social side, we are all familiar. The very recent news is the labor codes. 29 central labor laws are now brought under 4 codes, which is a significant move, I should say. Then the requirement for CSR, mandating CSR for companies under the Companies Act. Then grievance redress mechanisms like the banking and insurance ombudsman. And then the digital arrest and cybercrime that we are all familiar with now. Helplines and a portal to report it, and where you can raise complaints. These are very few examples. I'm just touching the tip of the iceberg. On the governance side, the Right to Information Act, recognizing that information is the right of the citizen, and government entities have to proactively share information or respond to requests. Social audits under the Mahatma Gandhi National Rural Employment Guarantee Scheme. And then there's a very interesting thing happening is in the Department of Industry and Commerce, there's a project monitoring group which looks at all projects above a particular threshold across the country. And any issue happening in any of these groups, whether it's a contractor issue or availability issue, timeline issue, this group pitches in and tries to mediate and find a solution so that project timelines are not affected. I would say it's a wonderful governance initiative. And then many states have brought their own guaranteed service delivery acts, wherein for a whole list of services, 100, 200 services, the turnaround time is committed by the government by virtue of the act itself. And the citizen, and it's implemented to a reasonable degree also in most states, where the citizen actually gets the service as well as updates about the service on his mobile. So these are all the government initiated. As a regulator, ESG actions that the government initiates. So, but having done all this, where does India stand in terms of performance? Not a very rosy story, I would say. Recently, the Climate Change Performance Index got released, under which India has fallen to number 23 from almost 5-6 years. It was within number 10. It has now fallen to number 23, largely on account of our energy use and our dependence on coal-powered plants. But this index has to be taken with a pinch of salt, particularly when we're talking of developing economies like India, where we have a huge development backlog for us to even to reach the developed status that developed countries have, standard of living status that they have. And it is imperative that we will have to depend on fossil fuel sources to power this entire economic, socio-economic growth. And measuring everyone in the same with the same lens might not help. Like you're seeing the statistics on the right hand side, India is the third largest emitter globally, with 7% of the global GHG emissions. But if you look at the box below, in terms of per capita emissions, we are not even 1/3 of the global average, which India is only at 2 tons of carbon dioxide per person, whereas the global average is 6 tons. Likewise, on the global SDG index, India currently stands at 109 out of 166 countries. Similarly, it is the 96 out of 180 countries on the corruption perception index by Transparency International. Many of you might have seen this news or news similar to this. India is now even questioning these indices itself and the methodology behind it. Because we believe that for the efforts put in and the changes that have happened are not properly reflected in the indices, which at least to my mind is a valid concern that India has raised, but it still does not take away the fact that there is a lot more to be done. I mean, we see it in our day-to-day lives. There is so much of gap that we as a nation have to cover to make sure that this economic growth passes onto every single citizen of the country, and we do it in an environmentally and socially sustainable manner. But the good news is that things are happening and we are moving in that direction. So we'll quickly cover the ESG reporting aspects in the public sector and also talk about certain professional opportunities, and then probably we can open it up for questions. So what is the state of ESG reporting in the public sector? First of all, what is the need for ESG reporting? Again, it goes back to my earlier argument, saying social governance environment is something which the government should be anyway be doing. Is there a need to bring out ESG reports separately, given the fact that we already have so many reports, budget reports, and so monitoring and evaluation reports that are coming out? Yes, there is a need, I would say, because when a government brings out an ESG report covering all aspects of E, S, and G comprehensively, it builds public trust and transparency, and to demonstrate that the government is committed to its ESG agenda, and it is not S and G to the compromise of E, or E action to the compromise of S and G, or governance, but then it is not delivering the social and economic outcomes that are demanded. So public trust and transparency, Second is, it's very important to do this reporting from a risk management perspective. Like they say, government is the ultimate risk bearer of all risks. There is no recourse beyond government. It's only God that you can have recourse to. And particularly in the area of climate, the risks are mounting every day, and it's only a question of time where climate risks then transform into social risks. Some of the largest reasons for migration and unrest is because of climate change. Similarly, social weaknesses transforming into climate risk, unless somebody's social needs are met. I mean, he or she wouldn't even have the bandwidth to think about climate and governance. So these are all interrelated concepts, and a weakness in one pillar definitely starts reflecting in the other, which is why it's important to look at risk management in its entirety and undertake reporting as a means to measure risk and take action on it. ESG reporting is also required because there are several national goals which India has committed at the international forum, as well as goals that states have committed nationally. So in order to measure where we stand on these goals and revise the targets if required and improve performance where required, that happens only when you start reporting on ESG. Access to capital, very important. We can keep blowing on saying that the funding need is huge and there is not enough money. But unless we are going to report and demonstrate action, as well as the financing need and the gap that is there, money is not going to flow, whether it is from domestic sources or international finance sources. Only when we start measuring things and results and the financing behind it is when access to capital opens up. And lastly, it's more like a soft rationale is only when the government does thought leadership and starts producing ESG reports can it legitimately ask the private sector also to do this, given that it has a much larger footprint, environment and social footprint than the private sector combined. In terms of setting thought leadership also, ESG reporting helps. So, but then the question comes, reporting for what or reporting for whom? Because we all understand that government operations are multi-layered. We just saw the public sector slide. There is central government, state government, local governments, rural, urban. There are a whole sort of government bodies which are operating. So it's everything gets delivered in multiple layers. Many times it is cross-sectoral. Most government actions are not restricted to a sector. The program or scheme might be within a sector, but it has impact outside on other sectors as well. And many of the government actions are directed towards long-term impacts. I wouldn't say even outputs and outcomes, but long-term impact, which within short time frames, annual reporting time frames, it may not be able to cover comprehensively. And there are significant spillover effects of government action. I mean, we can think of any number of examples. So if you encourage electric vehicles, you have the challenge of battery disposal and the benefit and the harm it causes. You encourage AI adoption, you have a skilling and employment crisis on the other hand. So each of government actions has its pluses and minuses. Public policy making, this is what makes public policy making both challenging as well as exciting. That it's always a very balanced path that needs to be taken after weighing the cost benefits and concluding that the benefits far outweigh the costs, or putting in place mechanisms to ensure that the costs and the risks are managed while implementing programs. But all this poses challenges for ESG reporting. So then what is the solution? What is the way out? Research suggests, or global literature suggests, that sustainability reporting or ESG reporting in the public sector should be expanded progressively to cover larger spheres of impact. You start small, you start covering more areas as your policies, processes, more importantly, data availability and data collection systems evolve. And that is how it has to be progressed. SIPFA research also gives a framework for how this is to be done. where it says first ESG reporting starts with the operations, the impact of government operations of a particular office or of a particular ministry or restricted to a particular program or scheme. So you start the ESG reporting there. Then start reporting on program outcome and policy effectiveness on the ESG aspects. So as a program together, how is it producing impact? And then you move on to, that pretty much covers the entire gamut of government action per se. Then you move on to the state of environment reporting, which is a combination of course, this diagram is from environment reporting context only, where the reporting is on the entire state of the environment, which includes government action, private action, positive actions, negative actions taken all together. What is going to be the state of environment? At the next level, you will obviously be reporting on the nation's commitment to the SDGs at an international level. And lastly is on the actually where you will be reporting on the value added out of all these activities when seen as a whole, and after considering the risks and or I would say the negative impact of all the actions. So there is a method to go about it, where you progressively increase the nuancing as well as the amount of detail of the reporting system. So what are the challenges in ESG reporting in government? Some of these are common to the private sector as well. But one big challenge is that reporting frameworks are not yet fully developed for the private sector. For example, in India, you have BRSR for the private sector or the business commercial sector. We don't have an equivalent of that for government. At the international level also, it is the same case. Of course, now the International Public Sector Accounting Standards Board is looking at sustainability disclosure standard, but it's still work in progress and there's no comprehensive reporting framework that is in place. There is a lack of mandate very clearly. There is no rule or legislation as of now which demands ESG reporting from the public sector. Political will is lacking. Apologies for the spelling mistake there. Political will is lacking because it has not yet got on top of the politicians' agendas or the elected representatives' agendas, which makes them realize that yes, this is also an important agenda to be taken up. And this is something which citizens are going to be bothered about in future. There are challenges of boundary definition. Like I told you, a single central scheme will be being implemented to the central government also, state government also, local bodies also, as well as parastatals. So where do we draw the boundary is very important. Is it at the organization level? Is it at a program level? Or is it at a sector level? So such challenges come, and also how to prevent a double counting. Insufficient data, yes, that is definitely a challenge. And then the law of unintended consequences. Every government action, like we were just discussing, has multiple unintended consequences or spillover effects, many of which could be negative and many of which could be positive as well. So how do you consider, attach measures to all of it and report in ESG reports? The entire framework around it is going to be complex. Capacity constraints. We know that government officers are understaffed and necessary skill sets are lacking. So adding additional reporting obligations is going to be a burden. And of course, the reporting burden itself, amongst the various other things, reporting activities that government entities do, this is going to be an additional burden. So, which of course can be solved through intelligent automation and clear frameworks. Because the data to be collected is not very different. That is what a government would normally collect even for its programs and schemes. It just has to be collected in an intelligent manner, and electronic systems must enable this reporting, and then such problems can be solved. Again, back to SIPFA research, it indicates that of all the challenges, the largest one is of course lack of data. Much of this data is just not recorded, doesn't exist in the system. So, which requires significant process change and automation to make sure that the data is captured. Of course, lack of accepted framework is another challenge. And the third biggest one is the lack of political support. None of these challenges are unsolvable, but it is going to take concerted action with a proper action plan to make this happen. So are there examples of ESG reporting happening? I've just restricted myself to the examples within India, not outside, because there are plenty of examples outside, but most of them are from a developed country context, which doesn't serve much purpose. Of course, most important is the SDG India Index dashboard itself, which I was mentioning about. It's a portal. I'll not open it right now for want of time, where you can go see for each SDG indicator what is the relative performance of a state compared to others, what is the ranking, what are the indicators, what is the performance against each indicator. It's a very interactive dashboard which you can go and have a look. Kerala has recently come up with a ESG policy for investments, where specific actions are there, in which they have committed in the policy, saying what are the incentives they're going to give for ESG positive action while giving business licenses, as well as the disincentives. Tamil Nadu Shelter Fund, it's an affordable housing fund, has a ESG management policy, and it was done in 2020. It's a very well written policy, which says across the entire cycle of creating affordable housing, project appraisal, planning, as well as implementation, how the ESG aspects are going to be taken care. And then something which we are all familiar with is the sustainability reporting that is happening by government-owned enterprises, which many of them are listed companies among the top 1,000. So they will already be being covered under the SEBI's BRSR requirement also. Organizations like NTPC is doing it, ONGC, NABARD brings out its sustainability report. So these are some of the examples. And another very recent news item which I thought I should share with you now that we are discussing, when it talks of this becoming the lingo of elected representatives, a very good sign this time was BTS, is the Bangalore Tech Summit. It's a national event and very popular. So the IT Minister of Karnataka, Mr. Priyank Kharge, has spoken about a 37% reduction in emission compared to what would have happened if it was business as usual, if the summit had happened under business as usual circumstances. So specific mobility apps were in place, which helped people plan their journeys. I think even the metro rides were made free, and the schedules were changed so that people can move towards that. All stalls were assessed for their ESG impact, and sustainable stall awards were given. So, and the best part is that it doesn't stop at that. The minister also says that a detailed sustainability report of this event will follow, which to me was a very comforting fact, that the very fact that the minister is talking about it and considers it important, and that a report is also going to follow, which is hardcore documentation of the ESG impact or the carbon impact of that event, was something which was interesting. So I'm not getting into the specific documents that are linked here, because these are available on the public domain, and you can have a look at it. So before moving to the questions, just spend 5 minutes on the professional opportunities that are available for finance professionals in particular. There's a wide range of opportunities across the landscape, I would say, starting with ESG policy. So finance professionals, chartered accountants are very well placed to help government draft the ESG policies, the laws, rules, and policies, because we understand legislation, we understand measurement frameworks, we understand accounting, and we understand finance. So this is very important, the knowledge of all this, to be able to help government prepare this. ESG reporting manuals, thanks to BRSR, there is enough practice and precedents available from the private sector now. So helping governments undertake the challenge around ESG reporting. I was talking of some of the challenges, the double counting, boundary setting, and then the unintended consequences part of it. How do you factor it all into ESG reports? Framing a policy around it will be very important. In fact, I can share one example is that currently we are working with the UNDP on helping develop a step-by-step guide for SDG budgeting for governments in India, state governments in India. So this is the kind of policy work that I was talking about. Next, programs and schemes. In designing programs and schemes, undertaking landscape studies, need assessments, and more importantly, program design. Given a particular outlay for a scheme or a program, or a lending institution wants to give some money, an international institution like a World Bank or Asian Development Bank wants to finance a program, an environmental program. It knows how much money, it knows which sector to spend on, but then the entire thing has to get structured into a proper program with clear outputs and outcomes and disbursement milestones, and then all the governance around the lending. So we've been fortunate to get involved in a couple of such program design assignments in the disaster management sector, in climate resilient urban development sector, and that is also a very interesting kind of profile to get into. Next is compliance. Compliance is, we're all familiar with compliance, whether it is the BRSR reports for public sector companies or for government, depending on whichever framework comes into place. Undertaking audits and evaluations of ESG report also, and providing assurance on ESG reports is also something which professionals can get involved in. Then financing. I mean, this is the hidden opportunity, I would say, across everything, because I've been again and again repeating myself, saying the finance needs are huge, and every channel of financing that is available. So there is a huge opportunity around structuring new innovative financing products, which can leverage equity, debt, as well as blended finance, concessional finance, all of this together to create financing products to direct money towards ESG projects. And of course, once the products are available, helping our clients access those funding in terms of transaction advisory, the due diligences required, the credit assessments that are required for an entity to, on one side, on the demand side to access the funds, and from the supply side to appraise projects. So on both the sides, I think finance professionals have a role. And of course, helping clients factor in ESG risks into their entire risk management or financial planning, because ESG risks can no longer be ignored. But then how those have to be factored into, how to build it into the risk register, and how to plan mitigation actions around it, how to hedge or take contra positions to mitigate such risks is all something that we can help out in. And of course, as the expertise develops, training is always there. Straight away, I can say corporate governance training, which is the G of ESG when it comes to companies or limited companies, I would say. So that kind of training, the social assessments, social audit is also one of the things that the institute has taken up. So qualifying ourselves in that and then imparting training is another area. So in short, the entire spectrum of opportunities around assurance or advisory, whichever way you look at it, consulting or the auditor role, there is enough work in the ESG space with the private sector as well as with the public sector. And lastly, what it takes to do it is, of course, to qualify ourselves in the ESG topics, where there are plenty of ESG courses and certifications available, like the BRSR course, that certification that the institute is offering. Similarly, there are other courses. So equip yourself with that certification and knowledge. And then informal learning, at least I would say informal learning helps a lot, where you attend webinars like this. There are YouTube videos. There is now a ChatGPT and other GenAI tools, which can, as you get a doubt, you can keep interacting with it and getting it answered, which makes concepts clearer as we go along. And to be part of social media groups which are focused on these topics. A lot of information gets exchanged there. A lot of recent trends we come to know because of being part of such groups, particularly LinkedIn. So it is very useful to be there and to be part of association groups and committees like the present committee, that Seemaji spoke about, the Governance and Public Finance Committee. There is also a Sustainability Reporting Committee of the CA Institute. And there are also committees at the regional and the branch levels. So it will be very useful to get into such committees, and then these are all on the preparatory side, and then you don't know when opportunity comes, and then you are able to take it up. So this was basically what I had to discuss with you. Hopefully, it has given you a good idea of ESG in the public sector, and contact details are there. So anytime happy to help you on or discuss any of these things further, because this is a kind of a mutual learning exercise. Nobody is an expert. The topic itself is so vast that we need to keep interacting and working. And you can stay in touch to look at some of the work in sustainability and climate that we at Maxi do. Thank you so much. Back to you, Jitinderji, and any questions that are there. So you're muted.
As you have already told in the last, the topic is very vast, and because the world is very vast, so environment is related to the whole of the world. So definitely, at the every stage and at the every space, the place, there is a different challenges will be there. There's somewhere the population is more, somewhere is emission is more. So definitely challenge will be there, I think. Now, sir, there are some questions by the members. First question is, what would be the immediate step for a public sector leader to take in adopting ESG for their entity?
Okay. So probably even you are better prepared to answer this than me being in the public sector. But then as the speaker, I will say that one is to first be aware of the commitments at the international level that India has, plus the commitments that your particular state government or organization has in the overall scheme of things. Like in India, there's a national action plan on climate change, there's state action plan on climate change, city action plans are there. And then narrow it down to your sphere of work, depending on which organization you are working in. As to for each of these commitments and indicators, what is it that your sphere of work you can do? If you are in mobility, you're in a transport corporation, it will be more about emissions and then fuel planning and then route planning and all of that. Similarly, on the social side, it could be about your employment policies and then the benefits that you are passing it on to your staff. And governance, of course, right from participation to how you structure the board and how decisions are documented and how they're followed through. So I would say start with the national commitments, draw it down to your sector and your particular functions of for the department or agency you are in, and draw up an action plan. That can be your starting point. And of course, you will have to get on board your governing body, whatever it is it a board or a committee or something, to get the plan approved, and then you can start acting on that plan. And make sure to have indicators at your level which you can monitor to know whether you are actually making progress towards the goals.
Yeah, thank you, sir. I really fully agree with you, because in each and every department of the central or state government, there is a lot of scope for this. Start from the corporation, garbage collection is also one of the main important thing, where all these things can be met. Challenging job is there for them. Now, the second question is, if local government agency encourage and provide public bus services over the private usage of car, whether this policy comes under the environment or social benefit?
I would say both, sir. Wonderful question. The fact that you are discouraging car usage and moving people towards public transport is definitely an environmental action. And the second fact that, I mean, I don't know whether it is free or just an encouragement, but if you are providing it free also, it basically encourages people to move from place to place. And when people move, that is when economic activity happens. So both from economic perspective, also it is important that active public transport is encouraged. But compared to cars, if you ask me, definitely it's an environmental action, very positive action.
Yeah, but sir, in especially I am talking about the Amritsar. There they started this public transportation. I think 7 8 years back, but later on, due to some or another reason, they stopped it, and it is now the all the buses are there in the shed and not working. It is more than 100 buses are there. So the government policy should be as such that when you start any project, it should be properly implemented and run effectively. Otherwise, this is only a mismanagement of public funds.
No, absolutely, sir. And now, with your comment, you also touched upon the third pillar, the governance of this scheme. So, first of all, identifying the need itself. Second is deciding what kind of buses to put, how many, and then what kind of routes, and to make it accessible for people. And there is always an element of risk when you take a decision like this, introduce a scheme. But the intelligence in monitoring it frequently to see that whether it is producing the outcome. If not, change the design, change the implementation, or stop the scheme altogether. So schemes not doing well is the reality of the day, because nobody can predict the complete outcome. But frequent monitoring and having reporting systems around it is what should have happened before more and more money can be poured into it. That is what I would say.
Yeah, definitely. Because thank you, sir. This is your well, quite. I can understand the situation. And now, sir, there is a third question. How can CS play a role to encourage ESG adoption in public sectors?
Yes, I did cover it in my last slide when I spoke of professional opportunities. I would say direct as a CA, if you are in the finance role, the very first thing you can do is help raise finances for whatever plans that are already there. And the second one is coming to given that you would be in a decision making role, impressing upon participating in the entire ideation process of what ESG actions can be taken place, developing a strategy for the organization, working with the other departments, developing, more importantly, translating this strategy into action plans as to by next year what is it that we are going to do. If we are going to adopt rooftop solar on our building, let us take a very simple case. What is the project report going to look like? What is going to be the total cost? By when are we going to recover the cost? And what from when does it start generating revenues? What are the risks involved and how do we manage it? So these are all things which come naturally to a chartered accountant. The entire project planning, monitoring, as well as the risk management aspects of it, and of course the financing. So from a limited finance manager role, definitely you can do. But if you are in a higher decision-making role as head of organization or in the board or committee, then the sky is the limit. I mean, you can do the entire set of activities right from policy to programs.
Sir, can we use the CSR fund for this purpose also?
Yes, sir. So CSR fund is very actively sought by various entities. Particularly, the NGO depends on CSR funds to fund all their activities. There is now the social stock exchange mechanism also, under which you can float financial instruments on the stock exchange on a zero principal, zero coupon basis, which are tied to how the funding is done. And CSR funds can subscribe to such bonds. The financial instruments are also there now to do it.
Right. Thank you, sir. I think your presentation here, it's a tremendous, have a full of knowledge and covering all the aspects and areas. Although it's a very vast area is there, I am really very because in the beginning I was thinking, yaar, bada boring sa, it will be a very boring will be there. So, but from the 2 hours I am sitting on my seat and listening all your this presentation, and it's a very wonderful it was there. So now I am really very thankful to our speaker here, Ashok Raoji, and especially the last you have told about the CSR. I think most of the members will be happy with this knowledge also. So thank you, sir. Thank you very much again. I will also try to contact you. If in any case our members needs any help, you please help them in this.
Absolutely, sir. Thanks a lot. Yeah, the pleasure.
Thank you, Shobji. Thank you very much.
Thank you, Simaji.
Okay, so thank you, sir. So we conclude for the day, sir.
Yeah.
Yeah, thank you very much, sir. Thank you. We are concluding for the day, sir. Thank you.
Have a good day.